Morning, Steve Free in Chicago with the morning grain comments. Mixed trade overnight with beans, meal, and oil a little bit lower, while corn and wheat's a little bit higher. Outside market stocks are a little bit lower. Crude's unchanged to maybe a little bit lower. The dollar continues to be higher. Gold, silver, copper are all lower. I think the markets are trying to position themselves for the Fed meeting, in which they're expected to raise interest rates 75 basis points, maybe a 25 to 30% chance they could do actually 100 basis points. And still the feeling that the Fed's going to continue to raise rate until inflation's down 2% from 8%, and that could put us in a recession and increase unemployment 7%, continues to keep traders and managed money from buying fixed assets. As far as the other news, USDA dropped crop ratings for both corn and beans 1 percentage point, which was a surprise to the marketplace. We also have the the corn plantings, corn harvest at 7% versus 9 last year. Soybean harvest 3 versus 5 last year. Winter wheat plantings 21% versus 17 average. Kansas 15 versus 10 average. And I think the dryness in the southern plains could slow planting, but there is some hope late in the forecast that at least Oklahoma, at least Colorado and parts of Kansas could see some rain. Spring wheat harvest almost done at 94%. We did see, besides the USDA lower crop ratings, one crop watcher lowered his corn yield 1 bushel to 169 and bean 0.5 to 50 bushels per acre. So I think in a normal year that would be bullish, especially if the USDA drops crop numbers again in October. But the problem is demand. Again, you've got Argentina soybeans priced at $582 versus US $614. Their meal's $499 versus US $527. Oil $11.99 versus US $16.28. Ukraine corn $261 versus US $324, and Russian wheat at $320 versus US soft-fed winter wheat at $369. So that demand outlook keeps the markets on the defensive. We also note that there was some Chinese companies that went out and looked at their China crop and came back and said the crop could be around 240 million metric tons versus USDA's 274. Demand is around 294. And so the question is, do they need to import corn? And will they wait for Brazil's 2023 crop? And what is actually the demand during these COVID issues and this dry weather in the Yangtze River Valley? Behind me is a picture of a farm in north central Illinois. The USDA is estimating that net farm income should be equal to the 12-12 record. This could reduce the farmer selling cash and until at least the new tax year, and could increase US 2023 acres.